On today's episode, we look at new ways to determine a borrower's credit score, and we discuss temporary rate buydowns. My name is Mark. Welcome to the Gentleman Broker Mortgage Brief. Vantage Score versus FICO. What are they and what do they do? While both use the 300 to 850 range and prioritize payment history and credit utilization, they are created by different companies. Vantage Score is often used for instant, free monitoring and by lenders seeking to include thin file consumers, while FICO has historically dominated in mortgage lending. However, as of 2026, Vantage Score 4.0 is approved for use in mortgages sold to Fannie and Freddie. Here's the simple version. FICO is what mortgage lenders typically have cared about most. Vantage Score is what consumers usually see for free online. So someone might say, Credit Karma says I'm a 720. Then I pull credit and they come in at a 668 middle FICO. This happens constantly. So what is FICO? FICO created the original mainstream credit scoring model used by lenders. So mortgage lending is still heavily built around those FICO models. So this is how the credit pull works. You pay for the credit report, it gets ran. There are three numbers, Experian, Equifax, and TransUnion, and they take the middle score of what those three claim. If there are two borrowers, they will take the person with the lower middle score and we use that number. That's the score that drives pricing and qualification. FICO is determined based on your payment history, that's at 35%. The amount you owe or credit utilization, 30%. The length of your credit history, that's 15%. The mix of your credit accounts, 10%. And your new credit accounts, 10%. So now what is Vantage Score? These are going to be Credit Karma, CreditWise, and other more consumer-friendly credit reporting apps. Those are going to be based on the Vantage Score system. It was designed to compete with FICO. Most free consumer credit apps use Vantage Score because it's cheaper to provide, easier for consumer monitoring, and updates quickly. Vantage Score is calculated with 6 categories of information contained in your credit reports. Unlike FICO, it doesn't assign percentages to how much weight the categories are given, but instead describes their level of influence. Your payment history, extremely influential. Your credit utilization, or the percentage of your credit limits you're using, also highly influential. The length of your credit history and your mix of credit accounts, also highly influential. The amount you owe, that's moderately influential. Your recent credit behavior, less influential. And your available credit, also less influential. Why scores are different? This is the main thing you need to understand. They weigh the consumer's behavior differently. Both models look at payment history, utilization, age of credit, inquiries, collections, and mix of accounts. But the formulas are different. So Vantage Score may reward something while FICO penalizes it slightly, or vice versa. One of the biggest frustrations we see is a home buyer saying, I have a 740. Then mortgage credit pull comes back, 682 middle FICO. Why? Usually because they were looking at their Vantage Score online, not the FICO score that lenders go off of. This is one of the biggest expectation gaps in lending. Here's a few major differences between the two. 1, credit utilization sensitivity. Vantage Score can react very quickly to utilization changes. FICO is usually a little more stable, meaning maxing a card may hit your Vantage Score harder, but paying it down may boost it faster. 2, thin credit files. Vantage Score can generate scores with less history. This is going to be good for younger borrowers. FICO often wants a more established history. And 3, collections treatment. Some newer models ignore paid collections such as small medical collections. Now, here's the exciting changes in 2026 that just hit us. There are some mortgage brokers, like myself, that can actually pull both reporting systems and pick the one that favors the borrower the best. This is a huge advantage. Not all loan officers can do this, and it will mean literally people being able to qualify for a home that were not able to normally. It means a more favorable rate when the difference between the two agencies were 20 points. I'm excited. This is going to be huge. I'm looking forward to it. While we're talking about saving people money, let's get into rate buydowns. A buydown is basically a way to temporarily or permanently reduce the interest rate in exchange for upfront money. So you pay the upfront fee, you get a lower rate. That upfront money can come from the seller, the builder, or the buyer. There are, in general, two types of buydowns. One, permanent buydown. This is when discount points are paid to permanently lower the interest rate for the full 30 years. Here's an example. You get a market rate of 6.875%, the standard rate for your situation, also known as the par rate. You want to buy down, so you pay points or a fee up front. Your final rate is going to be 6 1/8. That lower payment lasts forever. So this is going to be good for long-term homeowners and for buyers who won't refinance anytime soon. The second is a temporary buydown. This is where the rate is reduced only for the first 1 to 3 years. Examples: 3-2-1, 2-1, and 1-0. The note rate never changes. The payment is simply temporarily subsidized. That subsidy money sits in a custodial account and gets applied monthly to offset the payment. So what is a 1-0 buydown? A 1-0 buydown means year one, the rate is 1% lower than your standard rate. Year two onward, back to the full note rate. Here's an example. The original actual note rate was 6.875%. Year one payment is calculated at 5.875%. After the first 12 payments, the payment returns back to that 6.875%. The cool thing is, right now, I have lender programs that will actually pay that upfront cost for the borrower to get that 1-0 buydown at no cost to them. So another exciting thing happening right now. Right now, the 30-year fixed is sitting around 6.37. So to get the average home buyer a full point lower their first year, that's real savings. If you have any questions you'd like for me to answer, want to know what your numbers are and what you can even qualify for, or if you want me to take a second look at another lender's quote, you can always reach me at thegentlemanbroker.com. With that, I will leave you with this quote by Abraham Lincoln. The best way to predict your future is to create it. This has been your mortgage brief for the week. For everyone watching, I hope today is the start of a productive week. I hope you are proud of the work you are doing. My name is Mark, and I am the Gentleman Broker.